Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome viewers to another episode of Pathways to Prosperity. Tonight we discuss this big topic of Islamic banking. Everybody wants to know what's the difference between conventional banking and Islamic banking. And I'll do my best in the time allocated to us on the show to give you a brief overview onto some of the principles behind Shari'ah, the Shari'ah economic system and Islamic finance. So to start off with, let's answer the big important question, and many of us actually don't know this. What is the Shari'ah? So lexically, or from a pure translation perspective, Shari'ah means the path to a source of water. So you have something that is known as maqasid al-Shari'ah, or the objectives of the Shari'ah, and this is to lead mankind to this metaphorical fountain of the divine. This is what the Shari'ah is. So it is an amalgamation of all of the laws that Allah subhanahu wa ta'ala gave to all of the Anbiya alayhim salam through the ages. So it's a methodology and a way in which we should lead our lives. Now, the important thing that we also need to understand is through the ages, historically we had something called the Enlightenment period. Prior to the Enlightenment period, the head of the political state was also the religious head. So you had at Enlightenment this separation between religion and state. But the Sharia believes and the Sharia holds that mind, body and soul are inextricably connected. There is no separation of the state from religion. All of this works in harmony in terms of the Sharia. So if you take the economic systems that are applied through the world, Sharia also has its economic system. And if you look at it through the lens of economics, the Sharia economic system defines things differently, as different economic systems define things differently. So for example, in socialism and in capitalism, you have something that's called the factors of production. In capitalism, land receives rent, entrepreneurship receives profit, labor receives a wage, and capital receives a return on their investment. In socialism, those factors of production are the same, but socialist theory says that human beings are entitled to nothing else but a wage, and everything else is owned by the state. So the Sharia also has its own definitions of economic things. The core difference is what is money. Conventional economics teaches us that money is a medium of exchange. It is used when we buy and sell goods and services. It is a unit of account. It denominates the value of a particular thing in a particular currency, and it is a store of value. And this is where the Sharia economic theory differs. We do not accept that money is a store of value. Why? Because money is fiat currency in its form today. When it used to be gold-backed currencies, we would have accepted it as a store of value. But today, the Sharia economic theory says it's just paper. So what are the fundamentals of the economic system of Sharia in terms of the financial system? There are three main elements. We must ensure that riba, or interest, is removed. We must ensure that gharar is removed. Gharar loosely translates as speculation. And we must ensure that it is rooted in ethics. Now, we're not saying that the conventional system is unethical in entirety, but what we mean by ethics is money within the system cannot be used for any sin industry like arms, weaponry, gambling, tobacco, pornography, etc. So we ensure that money within the system is not placed within these industries. So the system is founded upon these three important principles. The big definition that many of us want to know about is riba. What is riba? There is loose translations across the spectrum. Some call it interest, some call it usury. But riba lexically is a verb in terms of how you look at it grammatically. So riba actually is, in its broadest possible definition, the act of renting out money at the rental rate called interest. But the Sharia says that money cannot be rented. It's a fungible item, just as food is a fungible item. It cannot be rented. And this is why in conventional economics, you have something that's called the time value of money. The reason for the time value of money is because as time progresses, the value of your money diminishes. But the Sharia says that money is not supposed to increase in value or decrease in value, because money in and of itself should have intrinsic value. But fiat currencies today have no intrinsic value. And let me explain what I mean. If I take a 200 Rand note, I can take this 200 Rand note and I can go into the marketplace and I can buy goods and services. But imagine if I took this 200 Rand note and tore it to pieces. What's happened? 200 Rand of value has just vanished from the face of the earth. Versus an ounce of gold will always be an ounce of gold. If it's in coin form or jewelry or ring form or raw gold form, it will always be an ounce of gold. So money, in terms of the Sharia, ought not to be able to appreciate or depreciate over time. So this concept of the time value of money is really driven by managing the supply and demand for money. Because money in the conventional system is treated as an asset or a store of value, it dictates a price in the market. So we go into the market and we say we want to borrow money from the bank. The bank says, okay, this is an increase in the demand for money. So as there are increases in the demand for goods and services in the market, the price of those things go up. So the central bank manages this through what is known as the interest rate. We manage the supply and demand of money. As a result of the increase in loans, the demand for money increases, so the price or the rent of money increases. But the Sharia says that this is actually a cycle of falsified demand. If I didn't have something, would I actually demand it? So we go to the bank and we say, please lend me more money. More money is demanded. Because more money is demanded, more money is supplied, and the more money we supply, the higher the rent becomes, the higher the price of money becomes. Now, because more money is provided to people, there is an increase in the perceived purchasing power. So you can actually go to the real goods and services market and buy goods and services because you have more money. And because more goods and services are demanded, prices increase, giving rise to this wonderful thing that we all know as inflation. And this is why inflation occurs. It is as a result of the supply and demand of money. And this is why, as our monetary policy committee, we have an inflation targeting policy in place. It continuously manages the price of money so that the supply and demand of money gets balanced. But in Islam, this is the crux of it. When it comes to money, a loan in Islam is a social contract. It is not a commercial contract. And the verse of the Quran that Allah subhanahu wa ta'ala gives us is وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى. And Allah has permitted trade and forbidden riba. What does this mean? It means that if you are lending somebody money, then you are doing it in terms of a social contract. You should not seek economic gain. But if you want to seek economic gain, then enter into commercial contracts where you can earn a profit or a return on your capital. So this is very important. Today, this word of a loan is convoluted into a commercial contract where interest is charged. But we must separate this. And the Sharia puts forward only one type of loan. It is called Qard Hasan. Qard Hasan is a good loan or a benevolent loan where you don't seek to earn anything in return. And the Sharia theory of a loan is لا تظلمون ولا تظلمون. Do not dispense prejudice, neither allow prejudice to be done to you. So this is how the Sharia views loans, views interest, the definition of interest, in comparison to how the conventional economies of the world see interest and money. So how do Islamic banks work? Let's take a conventional bank. Conventional bank works as follows. We as depositors would go to a bank and deposit money. This money rolls up into the bank's treasury, and the bank then takes this money and lends it out to other people on interest. And this is possibly where gharar comes in, or speculation is. We have no idea what this money is used for. So client comes in, asks for 100 Rand, the bank approves this loan to the customer, they charge the customer interest, and let's say they charge the customer 90 cents in interest. What happens is the customer pays this 90 cents back to the bank. The bank took this money from a depositor. So the bank takes, I don't know, let's say 80 cents and gives it back to the depositor, and that becomes your return on your savings account. And the bank then keeps 10%, and this is what banks call their net interest margin or their net interest income. So this is how conventional banks work. They take loans and have made it Shari'ah, made it commercial contracts. They charge interest on it. That interest is split between the depositor and the bank. So how does a Shari'ah bank work? Shari'ah bank works on commercial contracts and the concept of profit sharing or profit participation. You deposit your money into a Shari'ah bank. The Shari'ah bank utilizes this concept of mudaraba. Mudaraba is where you appoint us as your manager to go and acquire Shari'ah compliant assets. So we will go and acquire Shari'ah compliant assets and generate a Shari'ah compliant return on your assets. So for example, we will go and buy a house and resell this house at a margin to a client, or rent the house out to a client at a margin. Or we will buy a vehicle and rent the vehicle out to a vehicle. Or we will buy a commodity and sell that commodity at a margin. So there are multiple Shari'ah contracts available for us to generate a Shari'ah compliant return. And in similar economic fashion, once we've generated that Shari'ah return, we then take that return, give a portion back to you as the depositor from whom we sourced the capital, and we keep a portion for us as the bank, which then becomes our profit margin from the operations. So this is how the two universes operate. In economic terms, we receive the same economic outcome. But as Allah subhanahu wa ta'ala mentions in the Quran, that He has permitted trade and He has forbidden riba. Riba is a loan agreement, and in that loan agreement you seek to profit through money. In a Shari'ah agreement, there is an actual asset in the transaction. We trade with that asset, and through trading do we generate a Shari'ah compliant return. So I hope this has helped our viewers understand the basics of some of the key fundamentals of the Shari'ah, key fundamentals of the Shari'ah economic system, and how Islamic banks work. Until next time, Assalamu alaikum wa rahmatullah.